History being made as the leaders of 3 out of the 4 most powerful nations in the world meet in Tianjin in China. In fact, Prime Minister Modi and Chinese President Xi Jinping met for bilateral talks. The discussions went on for close to an hour, and both the countries have resolved to extend cooperation to each other in times of high global uncertainty. Now, this includes improving trade relations, restarting flights between the two countries, and ensuring supplies of essentials such as rare earth motors. On the diplomacy front, the long-pending border dispute with China will be negotiated, and the leaders have agreed to come to a mutually acceptable solution. China has allowed the Kailash Mansarovar Yatra to begin as well. India has begun issuing visas for Chinese nationals who wish to visit India. In the face of Trump's 50% tariffs on India, what does this global reset in relations between India and China mean for us? That's what we will discuss in the next half hour on NDTV Profit. But first, let's listen in to what Prime Minister Modi said at the bilateral talks held at the SCO summit.
हमारे स्पेशल रिप्रेजेंटेटिव्स के बीच बॉर्डर मैनेजमेंट के संबंध में सहमति बनी। कैलाश मानसरोवर यात्रा फिर से शुरू हुई। दोनों देशों के बीच डायरेक्ट फ्लाइट भी फिर से शुरू की जा रही है। हमारे सहयोग से दोनों देशों के 2.8 बिलियन लोगों के हित जुड़े हुए। इससे पूरी मानवता के कल्याण का मार्ग भी प्रशस्त होगा। परस्पर विश्वास, सम्मान और संवेदनशीलता के आधार पर हम अपने संबंधों को आगे बढ़ाने के लिए प्रतिबद्ध हैं।
Reaffirming Prime Minister Modi's rhetoric, Chinese President Xi Jinping reasoned with the importance of mending relationships between both the countries. He said, India and China must enable each other's success, and rejuvenating ties is a step in the right direction. He also further asserted the need for both nations to shoulder the responsibility of ensuring the well-being of its people. In fact, now let me quickly welcome in all our guests who are joining us on the show to take this discussion forward. We have Feroz Aziz, Deputy CEO of Anand Rathi Wealth, Jayan Das Gupta, former ambassador to the WTO, who are joining in as we speak. Welcome to the show, gentlemen, and thank you for making this time as well. Mr. Das Gupta, let me come to you first. Overall, if you see, before we go to Mr. Das Gupta, let me actually first take a question with Feroz Aziz. Feroz, welcome to the show. My first question coming to you is, taking the bilateral conversations into consideration between India and China, what is your initial assessment when you talk about the market's reaction on the outcomes of this bilateral meeting? How do you see markets digesting this now?
Good afternoon, Feroz. To my mind, markets will react positively. What has happened in the markets is, if you break participants of the markets into 3-4 categories, the domestic institution, the foreign institution, into a couple of other markets like cash market and the derivative market, the FIIs are already significantly sold in the cash market. They are almost 90% short positions in the index futures market, which means that already there's a lot of selling which has happened. Over the last couple of years, almost 4 trillion rupees of sale has been done by FIIs. So point I'm trying to get to is, any such positive sentiment booster also creates a huge short covering possibility. At least there is a seed sown for some short covering, which has actually dampened the market. And we've seen almost an 11-month time correction, 6-7% price correction, and also an earnings of 11% in Nifty from September last year has got discounted without any rise in the market. So point one, I think this will create a positive sentiment, especially because it's coming from a time frame where you've seen a lot of global uncertainty, especially due to the trade war since April. The broader market is reasonably negative. Almost about 2/3 of the stocks in the small cap index are down 25% from their 52-week highs. So there's a stored potential energy in the market. I think this can unlock it, or at least sow the seeds for that to happen.
Absolutely. Probably it will sow the seeds in the positive direction, Feroz. Stay with us. Let me also get in Ravikant Kapoor, Vice President at FIO. Mr. Kapoor, my first question coming to you is, given the recent imposition of the high US tariffs on Indian goods, how does FIO actually see the India-China bilateral relationship evolving in the new geopolitical landscape? And to add to this, which sectors, according to you, would be the key beneficiaries?
Good afternoon. Thank you for having me. I believe it's a very, very important watershed of re-establishing our relations with China. It's very important for us. They are our neighbors, and that is a point that we need to understand for both the countries. Whatever the getting together has happened because of the SCO, it's actually soon after the difficulties that we had with the US. And I believe, after speaking with top government dignitaries, that the difficulty is not really from the Indian side. We have still maintained our relations. We do not see anything negative. China, for us, is something like a building block. We already had the natural ally of Russia. China is the other partner, and India is playing the pivotal role for these two countries. Let us not forget that our cultural ties with China go back over 3,000 years with the start of Buddhism taking into China, and that's something that we need to build upon rather than build on our whatever the positives are, rather than focus on the negatives. Yes, we have a lot of problems. It is something that we have to work with very, very carefully and very strategically so that we do not get caught up in any kind of an emotional situation. But coming now to the matters of how India can be benefited and how the Chinese can be benefited, India already is a huge market for Chinese goods. We need to improve the trade quantities with China, and that, I believe, would be in the regions of IT and food and pharma. These are the places that we also need a kind of market access. We are only supplying, I would not say only, but mostly supplying raw materials. We need to have value-added products going in also. And once that happens, especially in a thing like auto components and parts, India has a huge R&D base already set up and working. We believe or perceive the Chinese to be the ones who are the actual producers of the goods in large scale. India also needs to produce, but China would also need the extra R&D that can be supplied to them. And that could lead into good joint ventures for both the countries. And probably we start exporting around the world. Another area is tourism. Huge countries, huge populations, huge money to be spent. These things also need to open up. And we have to somehow bridge the trust deficit. That will only come with time. It will not come with platitudes or signing pieces of paper. But it's something that can be done given the circumstances and given each one's needs and helping each other. I'm sure it is possible. Thank you.
Right. So, initial comments look really encouraging. In fact, let me first head across to my colleague, Soumit Sarkar, who's standing by with us to tell us what are the key benefits that, we see from a sectoral perspective and where it could come in what form. Soumit, over to you.
Well, multiple positive developments have already taken so far. They have agreed to resume direct flights, which was not there for quite a while. So that is one thing. Then there could be, they are looking to boost trade and investment, including reopening of border trades and also facilitating visas. Now, if you look at sectors that could stand to benefit, firstly, it's pharma, because that could strengthen supply chains and lower input costs for multiple pharma companies in India. Then there are marine products. This could be a significant export opportunity for Indian-based marine companies to China. For renewable energy, China's advanced technology when it comes to solar, wind and electric vehicles could benefit Indian companies as well. And in electric vehicles as well, Chinese battery technology and component dependence is something that would be crucial for India going forward. When it comes to tourism, exactly the fact that direct flights have been restarted, so that could boost tourism in both the countries at this moment. And when it comes to manufacturing, Indian industries can benefit from access to Chinese machinery, electric components and industrial inputs as well. Apart from that, critical minerals, rare earth essentials are very essential for when it comes to electronics, defense and renewable energy sector. Apart from that, agriculture, India relies on heavy import fertilizers from like urea from China. So that is also one of the sectors that could benefit in India. But apart from that, there are many other companies and other sectors that have what kind of dependencies, something that we are putting out here. There are consumer durable companies that import a lot of raw materials like compressor from China. Voltas, Blue Star, Whirlpool, Havells and many other companies depend here. Apart from that, as I was mentioning, compressors, electrical controllers, washing machines, components, PCBs are largely imported from China, so that companies could stand to benefit. Then there is Thermax, Triveni Turbine, KC International, Siemens, ABB, Kalpataru projects and other capital good companies that also stand to benefit, because a lot of machinery and electrical equipments come in from China. Companies like Tata Power, Sterling and Wilson and other green energy companies and power companies also stand to benefit, because a lot of machinery that comes in from China could benefit these companies going forward. Apart from that, there are a host of other companies that stand to benefit like this, Sona, BLW, Dixon Tech, Tata Motors. These companies have some or the other JVs with Chinese companies, so they also stand to benefit. But do remember, this is not an exhaustive list of companies that we have. We have just mentioned few companies and sectors here just for illustration and just for understanding purpose at this moment.
Thank you, Somit, so much for that, because this does give us an idea of the kind of benefits that could flow in. Details will follow as soon as things develop further. But let me also welcome in Jayant Dasgupta, former ambassador to the WTO. Mr. Dasgupta, welcome to the show. My first question coming to you is, given the recent imposition of the high US tariffs on Indian goods, how are you seeing the India-China bilateral relationship evolving in the new geopolitical landscape? Because the trade deficit with China is often a central point of discussion. From your experience, is the deficit a result of China's protectionist policies or a fundamental structural issue in India's economy? And how do you see things changing from here on now?
You have raised several very important questions. I think the trade deficit, burgeoning trade deficit, if I may say so, nearing now $100 billion, it is on account of our ever-growing requirements of capital goods, of fertilizers, of electronic components, organic chemicals, active pharmaceutical ingredients, other kinds of machinery, etc., etc. And these things are not luxury goods that we are buying. They are mainly raw materials or intermediate products or components that we require to keep the wheels of our industry moving. And we are buying them because we don't have the capacity or the technology available currently to make these products. So that is one thing. The second point is that couldn't we have reduced this trade deficit by exporting more? Now, there are a few things on which the Chinese have been, very sticky about allowing Indian products, especially agricultural products. But as far as industrial products are concerned, we don't have that kind of edge to really export a huge amount of things to China. So I think we will have to perhaps live with some trade deficit, substantial trade deficit, if I may say so. But we require the Chinese behemoth producing capital goods, other kinds of machinery, electronic components, to not only service the requirements of our domestic industry, but also our export-oriented industry in many cases. So that is the second thing. The third point I wanted to mention is that a lot of the problems that emanate or keep surfacing time and time again between the two countries relate to the boundary dispute which has been going on for very, very long. I think the time has now come for us to be pragmatic and to resolve this in the best possible manner so that this does not come in the way of the two countries from strengthening their relationship.
Right. So, we're talking about the trade deficit as well from here on. Feroz, let me come to you. We spoke about the way markets could take it as well. Now, given the discussions with regards to where easing restrictions go on the Chinese FDI aspect as well, what is your view on the potential for increased Chinese investment in India? And how do you think this could actually benefit key industries?
Yes, I think relaxing the FDI norms in the non-sensitive sectors, such as renewable energy, manufacturing, which is textile, electrical goods, farm equipment, is going to be a very, very useful thing, especially auto component and stuff. So today the restriction is close to about 20-25% of FDI limits. If those are relaxed, then it creates a lot of not just the capital, but the technology, because of the collaboration, which is very critical with China. China is far ahead of us on technology and precision equipment, for example, in several aspects of manufacturing. They are ahead of us. There's no harm in acknowledging that. Any kind of investing relaxation results in not just capital, but intellectual capital as well, because of the collaboration which will come along. So I'm very positive that these 4-5 sectors which are rattled out will have a strong benefit. I think there are other sectors also, because of this tension going away and we improving our ties with China. I think one sector which will get a huge benefit will be the capital market sector. I think that's one sector which has been under tremendous pressure for the last year and a half, from global uncertainties to trade wars to anything positive from a trade or global perspective has not come its way, be it FII flows or FDI flows for that matter. I think the capital market sector has a Nifty Capital Market Index, which was formed not too long back, has about 15 stocks. 14 of them are negative for this financial year, and substantively negative. I think that's where some value will emerge. Once there is some positive news, not just domestically. I think capital markets have just got a tailwind from the domestic flows, but I think globally we've not got any positive news. I think that'll be one sector which your colleague didn't speak of, so I thought it was wise to add on.
Capital markets could see a boost. We know that the FI investments have been dwindling right now. They have been actually seeing outflows, and it's the DIs who are coming to the rescue. Let me come to you, Ravikant. Categorically, as Feroz was mentioning right now as well, with the kind of flows that could come in, how are you looking at it? Because we're looking at textiles, pharmaceuticals, engineering goods, all of these sectors where if there is a potential inflow in terms of Chinese funds, how does it augur for the sector, particularly because these are sectors which are heavily dependent on Chinese imports as well to an extent? And secondly, the competition that could come in the form of cheap Chinese goods in these countries, how do both of these actually fit in well?
I think there are multiple questions and all of them are very relevant. Firstly, as far as capital flows are concerned, I want to take you back to a kind of anecdote or the reality that happened in 1991 when Indian economy opened up and the Chinese opened up in the late 70s. What we were told then is that India was in a hurry to bring in money, so we brought in money just to the capital markets. As far as the Chinese were concerned, they were insisting, I'm told, that 50% of the money comes in, gets back into manufacturing and will not be remitted back in the form of playing on the stock exchange. That, I believe, should be a very important point that should be taken up by a government. And if it's across the board, we need not worry. The Chinese also did insist on getting in technology transfers from any of the countries or the companies that were investing in China, another thing that India did not do. I believe we need to ground the money into the ground, literally, a part of it at least, so that it is not just playing on the stock exchange or just going to the horse races, because that's hot money which can be removed immediately and destabilize the country. Another thing is that these joint ventures that will take place as a result of what I just mentioned, we have to also endeavor that things like bulk drugs that India depends on for their entire or most of their pharma, which we are exporting to the US, these capacities also do get created in our country. Rare earth, I am told every country in the world has some part of it, but we have to do the R&D and be able to discover and extract it at economical values, and sometimes even at higher costs, just as a strategic reserve. Another point that I would like to make is regarding our boundary issues. These are very important. Neither can we overlook them and nor can we provoke it. But there is a very old saying that well-defined boundaries make good neighbors. So this is an irritant that has to be got out of the way, and with some give and take, I'm sure that should be possible. I believe the countries like China have also understood the resilience and strength of India. We are not the 1962 India anymore. We have our own place in the comity of nations. And China has also been hurt by the American tariffs for the last few years, or ever since Mr. Trump was there. They also are very concerned that they must have neighbors with whom they can work. And this trioca, if this can be created, and I'm not talking militarily, of Russia, China, and India, it means that the entire Asian continent is being well looked after. But word of caution, India must pursue its non-aligned movement, what it has been doing, being what we call something in the golden middle, not too close and not too far. We carry on with everybody. Everybody has their own interests. You do that with your own distance. At the same time, you're able to reach out to your neighbors.
Absolutely. Neighbors become absolutely important as well. And in fact, let me get to Mr. Dasgupta as well. From what Ravikant is mentioning, currently from here on, you're talking about the US-China trade war. You're talking about the imposition of new tariffs on Indian goods. How do you see India's position in the global supply chain shifting, number one? And do you think this creates an opportunity for closer economic ties with China, or does it really necessitate a more balanced approach from here on?
Well, the first thing I wanted to mention is that China is the largest exporter and the second largest importer in the world. And if we want to increase our GDP, our growth rate to between 6 and 7 to higher, we have to focus on exports. And for that, it is imperative that we also trade in larger volumes and value with China, with the US, of course, with the EU, with all other nations. But China would be a very important cog in that wheel. So it is important to improve our relationship in all aspects, which will help in boosting our bilateral trade. So that is the importance that I would lend to this. The second issue is about the China-US trade war. It is not really a trade war because the US has been forewarned and also slapped on the wrist by the cessation of rare earth magnets for some time by China. And China also has other levers in hand, which are its massive agricultural product imports from the US. It just took one decision in the first Trump term of stopping soya imports from the US. And that caused so much of distress to the soya farmers, who, of course, are also very strong supporters of MAGA and President Trump, that in the first stint of President Trump, he had to dole out $28 billion of subsidies just to the soya farmers. So China has many weapons in its hand, which unfortunately India doesn't have at this moment to retaliate. So I don't think there is any war between China and US. It is a question of both of them gauging each other's strengths and weaknesses and what could they expect from the other side.
Absolutely.
And
I think both
will,
the strengths, Mr. Dasgupta, should come together as well. The positives should be actually looked at from here on. But running out of time, my last question coming into Feroz. Feroz, in view of everything, you know, Somit also took us through a couple of sectors that could benefit. You're talking about pharma, marine products, renewable, EVs could gain as well, tourism, manufacturing, minerals. Now, if you have to look at all these aspects, how do you think should investors, both domestic and foreign, actually adjust their portfolio to account for this evolving dynamics of India-China relationship? Because that is what, in the end, the investors want to know.
Yes, absolutely. Investors make money on where they lay their chips. So I would say, see, where Indians, different sectors are poised, I think the consumption push, which is getting domestically given a lot of impetus, is still going to steal the limelight. Of course, so many of the sectors which we see and speak of when we're speaking about China have been under stress. Like if you look at auto, there's so many sectors, be it the renewable energy, infrastructure has gone out of flavor, consumption has come into flavor. There's been a lot of capital movement. If you look at almost the top 10 infrastructure stocks have moved its capital, people have moved monies from there to consumption, and they've not been at their 52-week highs, all the infrastructure, capital goods, industrial stocks. I think this will bring in some stability to them. But looking back at where the investor should have his money, I think the largest sectors which contribute to Nifty and NSE 500, for example, financial services is 31% in Nifty. That's a lot of weight, right? Pharmaceutical is just about 3.5% weight. So what I'm trying to get to is still be domestic facing is what I would say as an investor, because value is there and push is there. The other sectors where you have stocks and those were correcting rapidly over the last month and a half or two, they will get some degree of base formation, and that's what this deal will do for you. I think there's an equilibrium between mid cap, large cap and small cap, which was not there in the first quarter of this calendar year. Now there is almost an equilibrium. So having 50-60% of your money in large and breaking the rest of the portion into mid and small cap and being more domestic sectors, heavy weight in those sectors will help you. And if you're stuck with some stocks, be rest assured you don't have to exit them yet, because there is some degree of positive news coming for those. And so the pain will reduce rather than a lot of shift of capital with this news.
Absolutely. Would be my pain will reduce, and we're not talking only about the financial pain. There is a lot of strategic pain that does go out of the system as well from a geopolitical perspective as well. But thank you, Feroz. Thank you, Mr. Dasgupta, and thank you, Ravikant Kapoor, for joining us on the show and sharing all your views, because when you're talking about bilateral trade, the Modi-Xi Jinping dialogue becomes absolutely crucial. But completely out of time. With that, it's a wrap on this edition. Lots more lined up on the other side. Please stay tuned to NDTV Profit.